Bitcoin just lost $1,500 in the last 24 hours. The price is sitting at 61,854. And yet, nobody is talking about the data point that will trap the majority of traders right now. The 60-minute stochastic is overbought at 81, and the Williams %R is -21. That means in the middle of a brutal multi-timeframe downtrend, price is stretched to the top of its tiny range, and the bounce is exhausted. That is a textbook bear flag, not a bottom. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 3 exact levels you can trade tomorrow, complete with stop losses and take profits you can write down and execute. Instant market verdict. 0.25 to 110. The session bias is crystal clear. We are fading every rally. This is a trend market, not a mean reversion market, and the trend on the monthly, weekly, daily, 5-hour, and 1-hour is a strong sell, all of them. The single invalidation level that flips the entire structure and turns me neutral to bullish is a daily close above 64,043. Write this number down, 64,043. If Bitcoin closes a single day above that level, the whole bearish thesis resets, and we move to a consolidation or reversal scenario. But until that happens, every pump is a short opportunity. Here is the micro insight about herd positioning that matters more than the price right now. Funding rates on perpetual swaps are deeply negative. That means the crowd is overwhelmingly short, paying longs just to stay in the position. In a strong trend, that can persist, but it also creates a liquidity minefield. Market makers know exactly where those stops are sitting. A sharp, short-lived spike above local resistance can liquidate late shorts before the real leg down continues. That is the trap I'm watching. And it's exactly why you don't just blindly short at market. Let's walk down the charts from the weekly right to the 60-minute, because the context here is everything. On the weekly, the 200-week moving average is way up at 80,137. Bitcoin is trading nearly $19,000 below its 200-week moving average. That is not a dip. That is a structural breakdown in long-term momentum. Every time the weekly MACD rolls over from these levels, the subsequent weeks have been ugly. Right now the MACD histogram is deep in negative territory at -4,123, and there is no bullish convergence anywhere on this timeframe. Drop to the daily chart. The 20-day simple moving average is sitting at 68,833. The 50-day at 72,294. The 100-day at 74,635. They are all sloping down and stacked like a descending ceiling. Price is not even close to them. The ADX, the average directional index, is reading 59.4. Anything above 25 is a trend. Above 50 is a runaway trend. This is not a trend you fade for a quick buck. The RSI on the daily is 24, deep in oversold territory, but do not interpret that as a buy signal. In a strong downtrend, oversold can stay oversold for weeks. It is a measure of momentum, not a catalyst. Now here's what most traders miss, and it's the only reason we are even considering a bounce. On the 4-hour chart, we have a hidden divergence that changes the short-term risk dynamic. Price made a lower low near 61,200. But the stochastic oscillator made a higher high. That is a bullish hidden divergence, meaning the momentum of the down move is decelerating, and a countertrend rally is likely before the next leg. However, and this is the trap, the Williams %R at -21 and the stochastic at 81 on the 1-hour chart show that this bounce is already stretched. So you have a 4-hour that wants to pop and a 1-hour that wants to roll over. This is exactly the kind of environment that produces a false breakout above minor resistance, shaking out early shorts, and then resuming the meltdown. Let me give you the exact support and resistance levels you need to tattoo on your screen. Pivot point for today is 63,231. Resistance 1, 64,043. That's our line in the sand. Resistance 2, 65,000. Resistance 3, 65,800. 16. Above that, the 20-day MA would start to come into play. On the support side, S1 is 62,270. S2, 61,458. S3, this is the big one, 60,497. That 60,500 zone is the abyss. Below that, we are looking at the psychological 60,000, and then a vacuum down to 58,000 where the previous consolidation Saturday. The ATR is 2,628 points. That means daily swings of 2.5% are normal. So a move from 62,000 to 60,000 is a one-day event. Here's the next signal that changes everything. If we get a 4-hour candle close below 61,458, the trapdoor opens, and the liquidation engine toward S3 begins. Until that happens, we are in a messy zone where bears must be patient. Yesterday's core news is the gasoline on this fire. Bitcoin ETF outflows continued for another session, with institutional money pulling out as risk appetite sours. The headline reads Bitcoin dips below $62,000 as ETF outflows continue. And behind that, the analyst sentiment is screaming crypto winter is here. Whether it's premature or not, that narrative is driving retail panic and institutional de-risking. And the article about putting crypto-exposed stocks on ice just amplifies the chill. But the real engine is the cross-asset linkage. Bitcoin is the risk asset shadow. It moves tick 4. Tick with the Nasdaq futures, and last night the Nasdaq broke a key gamma support level. When the S&P 500 sells off and the VIX spikes above 20, Bitcoin does not decouple. It accelerates lower because it functions as a high beta play on the same liquidity tide. At the same time, the US dollar index is ripping higher on hawkish Federal Reserve whispers, crushing all risk assets. Yield spreads are widening, and real yields are ticking up, making non-yielding assets like Bitcoin even less attractive. So we have a perfect storm of negative ETF flows, equity weakness, and a strong dollar. My 1 to 2 week directional lean is for further downside, targeting the 58,000 region. The exact event that invalidates that thesis is a daily close above 64,043, which I already gave you. If we see a reversal on that scale, it would likely coincide with a dovish pivot in Fed speak or a massive equity bounce. Absent that, the path of least resistance is down. Do you think Bitcoin will touch 58,000 this week? Comment yes or no right now. I'm tracking consensus and I'll pin the best analysis. Most people skip this section. That's exactly where the money is made. Keep watching. I'm about to give you 3 trade plans, and for each one I'll show you an on-screen card with the exact entry, stop, and target so you can screenshot it and go. Strategy 1, the sniper, conservative. This is the high probability sell on a failed rally. The idea is to wait for a trap spike above the pivot and into resistance, then enter short once the 1-hour chart confirms rejection. The trigger condition, Bitcoin must rally into the 63,800 to 64,043 zone, then print a 1-hour bearish engulfing candle that closes below 63,500. Entry is on that candle close at 63,450. Stop loss goes above today's pivot and the swing high. We place it at 64,200, just above a 1. That gives a stop distance of 750 points. Take profit 1 sits at 62,000, which is a clean move back to the zone where we are now, offering a solid 1.9 to 1 risk reward. Take profit 2 is the S3 level at 60,500, giving a risk reward of 3.9 to 1. What voids the setup entirely is a daily close above 64,043. If that happens, cut any remaining position immediately to the sniper, conservative, entry, 63,450, 1H close below 63,500 after test of 63,800 to 64,043, stop loss, 64,200 take profit 1, 62,000 take profit 2, 60,500 risk, reward, ~1:3.2 R invalidation, void if daily close above 64,043 strategy 2, the active trader, standard. This plan captures momentum on a breakdown of the S2 support, where the liquidation cascade begins. The entry condition, a 15-minute candle closes below 61,400. We don't wait for the 4-hour close. We want to catch the first wave of panic. Entry on that 15-minute close at 61,350. Stop loss is placed above the minor consolidation high at 62,100, just above the S1 pivot, because a reclaim of that level would indicate a false breakdown. That's a stop distance of 750 points as well. Take profit 1 is the S3 cluster at 60,500, a risk-reward of 1.1 to 1. Take profit 2 is the extended level at 59,200, giving a risk-reward of 2.8 to 1. Once take profit 1 is hit, move the stop to break-even and trail it by the 15-minute ATR. This setup leans on the ADX confirming trend strength, so the probability of follow-through is elevated. The active trader, standard, entry, 61,350, 15M close below 61,400, stop loss, 62,100 take profit 1, 60,500 take profit 2, 59,200 risk, reward, ~1 colon 2.3 R invalidation, void if 1H candle reclaims 62,100. Type your Bitcoin range for tomorrow in the comments now. Give me a high and a low. I'll see who's aligned with the order flow. Strategy 3, the aggressor, high risk. This is the countertrend scalp for traders who can lose small and manage risk aggressively. It only triggers if we tag the 60,500 level and the 5-minute RSI hits oversold below 20 with a bullish divergence on the 1 minute. Entry is a market long at 60,550, anticipating a sharp reflexive bounce from the abyss. Stop loss is tight at 60,100, just below the psychological 60,000, a risk of 450 points. Take profit 1 is a rapid scalp back to 61,400, just below the broken S2, giving a risk-reward of 1.9 to 1. Take profit 2 is the pivot at 63,200, but only if volume confirms a short squeeze. This is a dangerous trade against the trend. Only take it if the structure is holding and you're willing to get stopped out multiple times. The warning is explicit. If the daily close is below 60,000, you're not catching a falling knife, you are catching a guillotine. The aggressor, high risk, entry, 60,550, 5M RSI less than 20 plus 1M bullish divergence, stop loss, 60,100 take profit 1, 61,400 take profit 2, 63,200 risk, reward, ~1 colon 5.9 R if TP2 hits warning. Only for traders accepting high loss probability. Void if 15M close below 59,800. Never risk more than 1 to 2% of your account per trade. No positions through high-impact news events like Fed speeches or sudden ETF flow reversals. Stops are non-negotiable. A hard stop is your survival in a market that can move $3,000 in an hour. This is how you survive to trade the next big move. The single most critical level for the next session is a daily close above 64,043. If Bitcoin does that, the trap resets and we pivot. Until then, every rally that fails at the 63,200 pivot is a gift to short sellers. Tomorrow I'll be watching the S&P 500 close and the Ethereum-Bitcoin ratio. If Ethereum starts holding up better than Bitcoin, that relative strength divergence is often the first whisper of a risk-on shift before BTC catches a bid. That video will be live on the channel. If you want the full breakdown on gold and the S&P, tap the end screen now. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one. Because in this market, a single missed level can cost you weeks of gains.